So where does this OPM actually come from? Let me give you the 5 sources you can access right now. Source 1, the buy-to-let mortgage. This is the most accessible form of OPM for most investors. A standard buy-to-let mortgage allows you to borrow typically between 60 and 80% of a property's value. Long-term, low-cost, and backed by the most established lending infrastructure in the country. Source 2, bridging finance. Short-term, fast-moving capital designed to bridge the gap between buying and refinancing or selling. Perfect for auction purchases, refurbishment projects, or deals that need to move quickly. Higher cost, but incredibly powerful in the right hands. Source 3, private investors. Individuals, friends, family, high-net-worth contacts, or professional investors who provide capital in exchange for a share of the profit or a fixed return. No bank required. No credit checks. Just a compelling deal and a clear agreement. Source 4, SSAS pension loans. A small self-administered scheme pension can lend money directly to your business for property investment. This is one of the most tax-efficient and underutilized sources of OPM available to UK investors. Your pension working for your portfolio. Source 5, vendor finance. The seller becomes the bank. Instead of requiring a full cash purchase, the vendor agrees to receive their payment over time, effectively lending you the purchase price. No mortgage, no bank. Just a creative structure that works for both parties. 5 sources, all legitimate, all accessible, all used by sophisticated investors every single day. Now I know what some of you are thinking. Isn't this risky? And the honest answer is yes, all investment carries risk. But the question isn't whether OPM is risky. The question is whether you manage that risk intelligently. There are 3 rules I live by when using OPM. Rule 1. Only borrow what the deal can service. The rental income must cover the mortgage and all associated costs with a buffer. If the numbers don't stack without you subsidizing them, it's not the right deal. Rule 2. Always stress test your numbers. What happens if interest rates rise? What happens if the property sits empty for 3 months? What happens if you need to spend £10,000 on repairs? Run every scenario before you commit. Rule 3. Always have an exit strategy. Know how you're getting out before you get in. Refinance, sell, or hold, but know your options. Follow these 3 rules and OPM becomes one of the most powerful tools in your financial arsenal. Here is the truth that the financial system doesn't want you to understand. Every empire was built with OPM. Every great property portfolio, every commercial development, every dynasty of wealth. They all started with someone who understood that you don't need to own the capital, you just need to control it. The question is not whether to use OPM. The question is how. And that is exactly what this series is going to teach you. In episode 2, we go deep into the buy-to-let blueprint, how to find the right property, structure the right mortgage, and build your first income-producing asset using OPM. If this episode opened your eyes, hit the like button and subscribe so you don't miss what's coming next. Drop a comment below and tell me, which of the 5 OPM sources are you most excited to explore? I'll see you in episode 2.